Next, let's take a look at the latest in the world of business. The rand was flat in early trade on Friday, ahead of budget and trade figures later in the day. The local currency traded around 18 rand 75 cents against the dollar at some point this morning. Head of foreign exchange execution at Rand Merchant Bank, Matete Thulare, joins us now for a market analysis. Very good morning to you, Matete. Thank you for your time. The rand weakened for giving up some gains from the previous season in the week. Help us make sense of some of those moves.
Good morning, and I think it's the final day of the half-year end, and the rand having another poor day yesterday, trading all the way up to 1888 in the afternoon session post the strong US data that we had and a rally in the greenback that obviously not only the rand but other currencies got caught and found themselves in the negative territory. So domestically yesterday we saw second quarter consumer confidence numbers print weaker as well, and also the PPI for May also slowed down to 7.3% compared to April's print of 8.6%. Now, the stronger than expected first quarter US GDP was the catalyst for the dollar rally that we found ourselves yesterday in, and also the number came in much stronger at 2% compared to the forecast of 1.4%. Now the rand gets underway this morning at 1878 to the dollar, and with the month end, with the quarter end, and also year end, expect some volatility, especially in the rand market, as some market participants will be squaring up their positions. On the data front, we've also got Eurozone CPI numbers late this morning, and also we've got the local trade balance numbers at 2 o'clock this afternoon, and that's also going to be quite a volatile number. So obviously quite an interesting finish to the half-year end.
Gold, on the other hand, remains at a near 4-month low, and oil heads for monthly gain as supply tightens. Talk us through some of those developments.
So, look, I think the most interesting one at this point in time is obviously the Brent crude oil. I mean, that is now set for a fourth quarterly drop. This is the longest losing streak in data going back to 1988. Now, the oil market outlook for the second half of the year will be interesting, especially given what's going to happen in the next 6 weeks. I mean, in theory, the market has been very sloppy on a year-to-date basis, and July should also be quite interesting because for the next 6 weeks, we're anticipating that with factors that will increase the tight supply. This includes the supply cuts by the likes of Saudi Arabia, the end of the seasonal refinery maintenance, which will affect about 2 million barrels per day worth of capacity. There's also strong signs of Chinese crude imports. Now, when you gather all of these things, it is going to make for an interesting set for where oil prices will go into the second half of the year. And also, does it obviously impact the local consumer in terms of the petrol pumps at the end of the July?
Yeah. South Africa's private sector credit grew 6.85% year on year in May, after rising by 7.07% in April. How do we make sense of that?
Look, I think this is quite an interesting one because credit demand really remains weak, which is obviously reflecting the tough economic conditions that is faced by both households and consumers and also companies. I mean, the reprieve that we're seeing now, I think it's going to be very short-lived, especially given the fact that we've seen interest rates over the past couple of months obviously increase. The credit demand is likely to gradually improve as long as the hiking cycle still eases up. The other impact is obviously the high inflation that we're seeing. The consumer is obviously being hit by higher fuel prices and also the food prices. I think it will take a bit longer to repair the damage that has been inflicted on the consumer and company profits over the past year and a half, especially given the rising interest rates that we've seen.
And the sentiments around Woolworths' growth outlook, where is the retailer standing?
I think there's really a lot of financial discipline with a different CEO at the helm right now. As soon as you've seen a new leadership, this has really brought a new financial discipline to the company, especially after the expansion-driven strategy of his predecessor, which obviously included an attempt to build a niche upmarket food business in Australia. That's left the group in high debt. At this point in time, there's disposals in terms of all the asset classes that they don't need and also the businesses that they don't need, which has obviously aided shareholder returns, and also the operating metrics have also improved. If you just also think about what they've done in terms of David Jones, as Woolworths has sold that business, they're planning to create a fashion powerhouse in South Africa, and also they're trying to also make sure that they're trying to find the mass market fashion, which is something that they didn't find in Australia. So they're now returning their efforts to becoming a luxury-led chain and obviously engaging Asian tourists, and that has been sold to investors. And I think at this point in time, their large format fashion business can be revived to likely reduce the ideas of any disinvestment that we are going to see over the next few months. Also, I think the merchandise mix of high-end food and also mass market fashion, that is something that a lot of global retailers are also doing, and also it shows that it can be managed successfully. And I think at this point in time, Woolworths is also on the right track.
Thank you very much. Let's perhaps leave it there for now. The very latest in the world of business, a market update there by Rand Merchant Bank's Matete Thulare.